Good morning. I just shot part of a video here from the Croisette in Cannes and realized that it stopped recording about a minute ago. I'm just gonna start fresh here. I figured I would stop around an area that's just got a beautiful aesthetic here. You can see right along the coast here in the Croisette. It's a beautiful, beautiful place in the south of France. If you've never been, I highly recommend it. I'll be going up to Monaco, Monte Carlo, Monaco tomorrow for the first time. I've never been there before. Saint-Tropez is on the docket for next week for a couple of days. I have been there before, really looking forward to exploring it more. And Cannes is sort of my base here until August 6th or 7th. And then I'll be sort of the last leg of my trip before heading back to New York. Looking at stopping in Stockholm for a weekend, Amsterdam to see a friend, and then I'll be back in the mix. So it's crazy because I've already been in Europe. I don't know if it's almost a month now, probably. So time flies. And just a word about the terrorism in Nice. You know, that whole story is just horrific. What I found though is that, you know, it's just like the markets. You know, if you're ahead of the curve, in a sense where you can predict what's going to happen, then you're in a better position. But if you react after something occurs, for example, it's really slow here. It's not really slow. It's busy, but it's not as popping as it normally is. I've talked to taxi drivers who said that it's like it was in the winter, typically, and which is right now the busiest part of the season, and it's really because of the attacks in Nice. People are they're avoiding their travel plans, they're changing them, they're just shutting them down. And I think it's a shame because after an event like that, it's actually the safest time to be in a place like this because of a couple of reasons. But I'm seeing armed guards, policemen everywhere around Cannes and the Croisette. This has never been the case before here. It's really beefed up. They're watching very closely. It's going to be tough. You know, obviously if you're just going to detonate a bomb, you can do it anywhere, but people are being hawked. You know, the other thing is that when somebody hits a target in a certain geographic area, rarely do we see it happen over and over and over unless you're in, you know, Syria. So anyway, I think there's an analogy there in terms of what are we doing in our portfolios. You know, there's an anticipation factor that you have to have, and a lot of times if you're looking at this stuff emotionally, when something's going up and you're seeing your account value rise, you know, the greed factor will kick in when in fact you're supposed to be doing what I call contrary action. Contrary action is that you feel you should do one thing, but you know the right thing to do is to do the other and then still do it despite what you're feeling. And that's been the case, like for example, with the Mux Mining sell that I put out on just a third of the portfolio less than 2 weeks ago. And just to backtrack a little bit, I wanted to talk about, I have been doing this since I was 20 years old. I was a licensed broker before the age of 21, and I've managed money for hundreds of individuals. I manage my own portfolio. I delegate some of it to third-party managers, but for the most part, the core stuff that I do with most of my money, I manage myself, and especially because I have such a massive amount of my net worth in the miners, in gold and silver related investments. I'm very active with everything that I talk about, but I take a viewpoint that is really, a lot of things are second nature to me, but I realize that I have so many different subscribers, readers, and members that it may not be second nature to you. And so I know I've made certain strategic comments, investor psychology comments in the past, and subscribers really appreciated it because like I've had people tell me that, you know, with newsletter writers you'll get buy recommendations. No one ever tells you when to sell anything. I try to do that. You know, I think that it's a little bit tough in a sense that I give out free content to thousands of subscribers. I try to make the Gold Investment Letter different because I want actionable ideas to make money on, specific individual ideas, but I also like to talk about the macro positioning, the sector, the market, investor psychology. That's where I think the value is, but I need to save a lot of the juicy stuff and the details for premium and elite members, and so I'm a lot more active with trades and telling people to take stock off the table For example, we just had one of our top 10 juniors to buy that had tripled, actually, yeah, tripled, a little more than that, because of a tout in an investment group that I knew would be short-lived. And so the fact that we had tripled our money since the junior list buy, I told everybody to dump it and start taking profits. And I don't think that's necessarily normal, talking to certain certain people. I don't know if it's because people have ties to the companies, if there's just a marriage sort of mentality that happens, I'm not sure. In any event, talking a little bit about just what we're in right now and where I think we are in terms of this market. In the beginning of the year, putting a lot of money in gold, silver, and the miners was a no-brainer. I mean, the value in the sector became the greatest value that existed in terms of investment asset classes that I saw anywhere in the world. Now, a lot of these positions have tripled, quadrupled, doubled, and we have to be more selective. We have to be more picky. We have to be mindful of when are we going to sell these positions, how are we going to mitigate risk. I think the McEwen Mining is a great example. So today the stock is about 20 to 25% cheaper than it was when we took that third off. And here's how I approach this stuff. I'm not buying it back yet. The miners seem to be consolidating a bit above their 50-day moving averages. I don't know if I said this in this video or the last one, but I wouldn't be surprised to see a flush. If we're gonna go to new highs in the fall, you'll see like a shaking of the trees. They call this a bear trap. Typically when you'll see a flush below the 50-day moving average, it shakes people out. They think, okay, this thing's breaking support. They get a capitulation and they bring it right back up that day, and that's the start of the new leg higher. We could see that here. If we do, I'm gonna buy back probably all of the mucks that I sold. So let's use an example of the fact that I sold a third of my position, or 50,000 shares. 50,000 shares, I can buy it back maybe a buck and a half cheaper. I'm not gonna put everything back in terms of the capital. What I'll do is, let's just use today's prices. Let's just say it was a buck cheaper that I ended up buying all that back. That's a $50,000 profit or save, or just for making that move. I saved, if you will, $50,000 that went into the bank. And what I'll do in this case is I will put that money to specific things to reward myself for making the right move. When we make the wrong moves in the market, we suffer. We lose money. Some people, it affects their lifestyle. Most people it doesn't. It's money that's in savings, but it eventually does, because if you're gonna retire on the funds, unless it's just all excess and it doesn't really matter and you're very, very wealthy, it affects us in one way, shape, or form. Maybe it's going to be that you don't retire when you're 60 versus 65. Could be a lot of different things. For me, when I trade and I take money out of the market and I'm successful, I break it down. So let's say there's $50,000 there. I have the same position on in mucks. I could do that today. It's basically at $1 cheaper today. If I did that, I would take that $50,000 and decide what to do with that money specifically. In this case, I know for a fact I'm gonna shave off, and I already pretty much have,